Hello and welcome to this session in which we would look at auditing property, plant, and equipment. Specifically in this session, we're going to look at two things. A quick overview about the property, plant, and equipment cycle, just kind of give you an idea. And as auditors, we have to assess the internal control. What do we look at when we're assessing the internal control for property, plant, and equipment? Part of the acquisition and expenditure cycle is the auditing of property, plant, and equipment. Of course, when you buy property, plant, and equipment, it's part of buying and paying for those expenditure. However, property, plant, and equipment are a little bit different than other assets. They're a bit different than inventory. They're a little bit different than supplies. Why? Because you don't buy them on regular basis. You buy them sporadically and they include large amount of money. So, but what are they? Property, plant, and equipment are tangible, something that you can see, you can touch, like a vehicle, like a building, like a warehouse. It's long-term, it served the company for many years, and it's used in business operation. We use it to run our business. Then, why is this important? This is important because if you compare them to other assets, for example, inventory, you buy the inventory, then you expense it in the same period. Property, plant, and equipment, they generate revenues for many years. And this is going to be an important point when we actually start to do the audit. We're going to see why this is important, because when you buy initially the property, plant, and equipment, you want to make sure it's recorded properly on the books. And what are some examples? Land, building, machinery, vehicles, furniture, and fixture. Now, if you are not familiar with property, plant, and equipment, which is I would think you are if you're studying auditing or planning to take the CPA exam, but if you are not, if you happen not to be, go to farhatlectures.com. I have a financial accounting course and I have intermediate accounting course. Financial accounting is the introductory accounting, and the intermediate is the more advanced accounting, if you want to learn a little bit more about property, plant, and equipment. In this session, I briefly go over the journal entries, gonna have to refresh your memory. So let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Hello, my name is Farhat. You are here because you are either an accounting student, a finance student, or someone who's studying for their CMA or CPA exam. Great. You are looking for some additional help, and we can help you. I strongly encourage you to visit my website, farhatlectures.com. I offer additional lectures, resources, including PowerPoint slides, multiple choice questions, in some circumstances, exercises, and true-false questions. Our material is aligned with your CPA review courses, with your CMA review courses, with your college courses. I offer a risk-free trial that you can try to find out whether my website can help you or not. If you find it helpful, you subscribe, you keep your subscription. If not, you cancel and your risk is free. If you like this recording, if you like my lectures, you would like what's on the website, give me a chance to help you with your college courses as well as professional certification. I hope to see you on the website.
What comes with property, plant, and equipment? What comes with it? Depreciation and accumulated depreciation. Because remember, those assets, as I mentioned a minute ago, they service the company for many periods. So what we have to do is we have to allocate the cost over those periods, and we call this depreciation. So what companies would do, they record depreciation and accumulated depreciation in something called fixed asset master file, or fixed asset schedule, or a list of fixed asset, or a list of property, plant, and equipment, which is a key document in auditing. What would the file include? They would include the description of the asset, when did we buy the asset, how much did we pay for it, the depreciation method we are using, accumulated depreciation. It looked like a schedule, like, just a table with description, names, so on and so forth. Now on the CPA exam, you might see this in a simulation. So when did we buy the asset? How much did we pay for it? What's the depreciation method? They might be asking you to see if there's any errors, or reconcile this schedule to the paperwork, to the source document, or reconcile this schedule to the financial statement. So you need to know how to do so. So auditors rely on the record extensively to verify the accuracy of the property, plant, and equipment, because accuracy means you are computing depreciation and accumulated depreciation. Accuracy deals with the dollar amount. Now, from an accounting perspective, kind of basically real quick, what do we have to do is we have to first put the asset on the books. So just real quick, we purchase an asset and we paid cash. We purchased it for 100,000. We credit cash, debit the asset. Now we have the asset on the books. What do we do next? After we have the asset, we'll depreciate the asset. For the sake of this illustration, we're going to do for year 1, 20,000, and for year 2, 20,000. So that's the other accounts that you need to be familiar with. Depreciation expense and accumulated depreciation. These accounts serve to reduce the asset. Now we have accumulated depreciation of 40,000. The company decided to sell the asset. Well, if the cost is 100, accumulated depreciation is 40, we have a book value of 60, and for the sake of illustration, we sold this asset for 70,000. Well, if we sold it for 70 minus the book value of 60, we have a gain of 10,000. Now let's book the entry. To book the gain, to book the entry, we will first debit cash 70,000. Okay, that's great. We have to remove the asset. Now the asset is down to 0. We have to remove accumulated depreciation. That's down to 0. And we have to book a gain of 10,000. Now, in financial accounting and intermediate accounting, every journal entry that I did, there's a whole lecture. So when we put this 100,000, how did we come up with the cost, how to book depreciation, and how to dispose of the asset. So bear in mind, this is just an overview. I just want to make sure you are familiar with this. Now, as auditors, what do we have to do? We have to assess the internal control of the cycle that we are dealing with to determine whether we should rely or not, so on and so forth. So now we're going to look at this internal control assessment before we dive into the auditing part. Now, auditor assess internal control to ensure accurate financial reporting, that the company is doing a good job recording those numbers before we start to do our job. While substantive approach is common, integrated audit require evaluating key control over significant transaction, including capital asset purchases. Of course, we have to do that. We have to evaluate if we are conducting an integrated audit, which is, it includes the internal control. So control over occurrence and authorization. So what type of controls we need to evaluate to make sure that the transaction took place and it's properly authorized. So keep in mind, capital asset follow a structured approval, very structured approval process. Because remember, you are buying an asset that's expensive. You don't buy it very often. Therefore, standard purchases does not apply, because standard purchases only require maybe the department or your supervisor. High value items or specialized equipment like property, plant, and equipment might need additional approval, like capital budgeting reviews, technical verification by engineers or expert. It might even need the board of directors approval. Certain assets, they're that expensive. So this makes it easier for the auditor because we have support and documentation beyond the invoice, like the budgeting record, the specification by the engineer, the board of directors meeting to tell us that yes, a transaction took place, it was approved by one of these individuals or one of these groups. The authorization is pretty straightforward. The company will have a threshold for authorization. So for example, anything above 50,000, it has to go to the board of directors. This makes it easy for you. So if there's a purchase of 50,000, let me take a look at the board of directors, or I would look at the board of directors records, say, okay, there's a purchase, let me see if it exists. So large expenditure and lease agreement might require senior management approval. Again, the more paper document, the better for the auditor. Controls should also govern asset disposal. When we dispose of an asset, we'll talk about this in the next session when we do the actual audit. Ensuring decisions are authorized at the appropriate level. Also, when you have assets, sometimes the asset becomes obsolete, or we might have to impair the asset. Well, how do we do this? What are the approval? We need to identify the proper accounting treatment, how the company is following these things. Also, major maintenance or improvement project, well, those also must receive approval to ensure compliance with financial policies. What I'm trying to say is these approvals are good. If they exist, that's really good, but we have to determine whether they exist, whether they're properly implemented. Remember, we have to assess internal control. Let's take a look at this multiple choice question from farhatlectures.com. The primary accounting record for PP&E is generally a fixed asset master file, which may include all the following except. And the reason I have this question here, as I mentioned, you could see this on a CPA exam simulation. So when it deals with property, plant, and equipment, they would always give you a fixed asset master file. And what would this fixed asset master file include? Well, it would include like what? Well, it's going to tell us three things, and one of these things it does not include. Well, does it include a detail of the manufacturing machine parts? Yes, it will show you the name, the description, detailed, whatever is necessary to describe it. Yes, I would say this would be included in a fixed asset master file. This is out. The current year depreciation expense of newly purchased equipment. Yes, it should show you the depreciation expense of a newly purchased equipment. Yes, it will show you that. The vendor's price list of equipment to be purchased. Well, the fixed asset master file is, first of all, the vendor price list is irrelevant for us because the vendor could be asking for any price and we could pay something else. That's one. Two, even if the vendor list is 100,000, we may end up recording the asset at 107. Why 107? Because we might have incurred additional cost. So we don't care about the vendor list. Sometimes it could be the vendor list, the cost, but that's not the case. Of equipment to be purchased, well, we don't put something on that list that hasn't been purchased yet. So I would say C is definitely the one that should not be. But let's look at D, the selling contract of the property disposed. Yes, if you sold it, if you sold the asset, the master file will show it's sold and it will show the price. So that will show there, that's out. So C is something that you will not see on a fixed asset master file. The fixed asset master file will show you when did you buy the asset, how much you pay for it, description, depreciation. In a typical CPA exam simulation, they would ask you to reconcile this to the financial statement, or they will tell you check to see if there's any errors. Maybe the depreciation, one of the asset is not being depreciated, or it's depreciated too much, or one of the asset we sold, there's another exhibit that they told you it was sold and it's still on that record, not marked as disposed of. So those are the things you need to be familiar with. Oftentimes, students are intimidated by this fixed asset master file, but don't. Google one, look at one, just at least the asset. It could be many assets. You're looking for something unusual. Unusual means a large depreciation amount or an asset that should not be there. And it's there because it was disposed of. What should you do now? To practice more multiple choice, to get comfortable with this, go to farhatlectures.com. Whether you are a student or a CPA exam candidate, the best thing you can do is invest in yourself. Farhat Lectures is always here to help. Good luck and stay safe.